Hey traders, Richard K here from Price Action and Income, and welcome back to another video where I'll be talking a little bit about some market geometry analysis where I see the market currently in relationships to market geometry, especially on crude oil, which is one of my favorite markets to trade. As you all know, the coronavirus pandemic has really got the whole entire world in a stranglehold at the moment. Especially in crude oil, is probably part of the fear that is prevalent in current markets, driving price lower, as well as political influences between Russia and the Saudis. I do, however, believe that price is at such an extreme low. I'm talking multiple year lows that I do believe at some stage that we'll get a decent buying opportunity. The question just now is how far can price drop? And this is where I just want to take a large big picture view of crude oil, where price is at relationship to as much data as I got historically. I've only on TradingView got data back starting here in April 1983. But that will be sufficient to do the analysis video that I'm about to show you, and just try to show you where I think price can still go to before we find support. It's really difficult to trade crude oil at the moment. On the future sides, the margin requirements are so high that it's really making it impossible to just trade a contract unless you're trading the CFD side of things, or even if your Forex platform are offering your way to trade crude oil. And if you can just control your actual position size with crude oil, just be very careful if you do trade at the moment. But anyway, without further ado, as we all know, crude oil since the start of this year been coming down hard. It's been at new multi-year lows. It already broke below this January 2009 low, which is another thing. It seems that this January sort of time frame is an important time of the year where you can either have the start of new trends or start of corrections happen. So we just broke this 2008 low. The January 2016 was it February? Yeah, about February 2016 low, and we are currently approaching multi-year lows. Now, as we all know, this all-time high was here in about June-ish 2008. We were nearing the $150 barrel price range, and price started coming lower. As you know from a previous video that I did, I used a Pitchfork, which I'm just going to show you quickly to rerun this. From this low to that high, back to this low was a standard, original Pitchfork. And you'll see that this setting or Pitchfork setting using standard Allen Andrews Pitchfork setting contained price pretty well for an extended period of time until price reached the center median line of this Pitchfork on what it was about again the 6th of January this year, and price just came downwards. Now it's extended below this low red warning line where I thought price might be supported, but it's not holding. So if something's not holding, you need to reassess your analysis and start drawing over again and think about where price might be heading in next before support comes in, because I do believe price is at such extreme lows that all the bulls are actually throwing in the towel at the moment and they're giving up. And this is normally when you'll find opportunities to enter into a market that could result into large trading opportunities. In this case, I think to the upside. So since this first drop we got lower here, we either have what we call an A, whatever this was, a B, and a C wave coming down with another wave yet to follow, whether this will actually go to new all-time highs or start a new long-term trend. I can't really tell you that, but even if you count towards wave, things either happen in threes. We have one, whatever this was, 2, 3 before this happened, or things happen in fives in Elliott wave terms. We've got 1, 2, 3, 4, with the fifth sort of wave completing now, either part of a larger correction, start off or the end of a long-term downtrend before we can get an upwards move going higher. So now the question is, according to me, just drawing a simple shift pitchfork using this high in October 2018 to the low in December 2018, back to this high in the end of last year, beginning this year. And if we are looking at what price has done now, it just collapsed straight through this lower median line, found some temporary support. Uh, Price shot lower. It opened right at, and this is where we had that massive drop happening a couple of weeks back, and prices dropped lower. Now prices currently just tested this opening at open this week. That first drop low is low, and we now currently have the lower rate warning line of this new blue pitchfork round about the $16-17 handle. Now, if we use Fibonacci extensions, we measure this previous swing. We go from this high to this low to up to this high that ended in Jan 20 to this recent high, and projected lower, we surpassed the $100 level. We got the 1.382% Fibonacci extension just below, and coincides with this low red warning line over here. So I think there's a very good chance that price heading towards this low over here before support will actually come in. And if you count in the bigger scheme of things, then I think what we are looking at here is a 1, 2 with a 3 about to end. We're going to have a fourth wave higher and then get a fifth wave lower again. Let me just take my magnet mode off. So I'm thinking what we are getting is something like this before this actual move will end. And again, guys, we have the 1.618% extension below the 1.382 naturally. Price could very well go there, but I think when we actually are looking at lower prices like the $10 handle, then it's game over for crude oil. I just really cannot see how crude oil can go that lower. We're still heavily dependent on fossil fuels like crude oil. This is just fear driving this market, or we have some political setups happening here where we are going to get some countries, big players entering this market at very low prices and see this thing turn around and have multiple years to the upside. And if we can just get into this position, or get into a long position, to the upside at some stage at these low prices, then I do believe that it will be a fantastic trade to take, especially if you can get in on the option side, see if you can take long-term options. The other alternative is to perhaps look at a market, let's look at USO, which is the ETF that follows crude oil. Let's just bring that up. And I just want to show you we are on the ETF side of crude oil, which tracks WTI crude oil futures at such extreme lows that I do believe that things are so cheap here at this moment. This is a fantastic market to attempt a trade or to get into once crude oil might be turning to the upside. And you could easily on this, if things do go higher, make quite a decent amount of money on the ETF side, especially if you want to have exposure trading crude oil, but you do not have the margin requirements to trade crude oil. Then USO is a fantastic alternative market to take a trade in. Now, if I just look back at crude oil, if this count is correct, then we're looking at a 1, 2, probably the end of a 3. We're going to have a 4. 4 waves the fourth wave corrections can take quite some time to correct. And then come down in the fifth wave. Now, whether this will touch the low red warning line again or extend to this 1.618%, this is something I'll update you guys onto when and if we do see some sort of correction happening. But I do expect that we might even be in for quite a long-term wait here before we'll actually get some decent upside. We might even look until about the end of this year for this downwards move to end before we'll see a larger correction to the upside. But like I was saying, just note that I think we are at such extreme levels. If we zoom right back into the weekly chart, we'll see that all these all-time lows happened within a range of about the $9.5 handle up into about here by the $13 handle. Price is currently approaching this low here. Price has previously found support at this sort of highs, this low here in January 2018, Feb 2016, sorry, found support at these sort of highs, which was resistance. We turned into support. Now, guys, how far we can drop, we could easily make it into this lower red warning line, as explained before, which puts us about the $17 handle before we get regression higher. But I do expect that this is not the end of this decline. We might be going into consolidation phase quite soon, which will be tricky to trade. I would just say, like, wait till we have a clear third wave in, followed by a fourth wave, and then a fifth wave back lower into either that low red warning line, could even go as low as $13. But I really don't see things going to 10. I might be wrong, but if things do get that low, then in my opinion, it is time to get into this. And then an alternative market would be like USO, which is already at such low prices. I cannot see it's going to go back to zero. And if something just goes a little bit higher, you can easily make a double up on your money on there. 4 times up, much more money you can make to the upside, maybe trading something like USO if you cannot trade the crude oil side of things. So guys, that's just my opinion on US oil or WTI crude. I do see opportunities when everyone else is throwing in the towel. So like I said, if you're wanting to get into crude oil, maybe consider looking at USO. Maybe look at the option side. Maybe you got access to CFDs, or on your forex broker it gives you access to crude oil. It's just a market to consider, but I do not think this decline is over yet, but we are such extreme lows that I do think great buying opportunities will present itself probably this year still. So guys, until next time, if I do see something happen, I'll give you an update on crude oil. And yeah, I hope you guys are all staying safe during this pandemic. We are actually in lockdown in South Africa, the 4th day of the 21-day lockdown in South Africa. So I am at home shooting this video, but I'm still working. I'm sure like many people are still working from home. On the trading side, we are still running our service with our members on the EPS forecast side of things. And in the end, I just hope you're all staying safe. And until next time, guys, this is Richard K from Price Action Income. Have a good one. Take care. Bye-bye.